Hello everyone, how's it going? In this video, we're going to be talking about Mullen, trading under the ticker symbol MULN on the Nasdaq. So Mullen for the first trading session of 2023 has been doing quite well for itself, raising around like 33 cents by the time I'm filming this. So I would say that the year is likely going to be kinder to Mullen as we go forward. First of all, because the massive, downsides of investing in Mullen has already been priced in my opinion. And the other thing is, it seems like institutions are now buying both call options and the shares themselves massively. Many institutions, I don't know, like Private Advisor Group LLC, Cetera Advisor Networks, and so on, they have both tripled, quadrupled almost their holdings in Mullen from one quarter to another. So this kind of suggests that at some point the bears have already made their play, and now it's the turn of the bulls. Whether they can lift it to like $1 and beyond, this is another discussion entirely. But for now, let's say that the main point to concentrate on seems to be the fact that Mullen will have a regain in interest, to say the least. Like, I am fairly certain that over the next couple of months, we're going to see Mullen's share price testing at least the 50 cents level, if not the $1 level. And then after that, maybe the market would have for example, the interest rates might have peaked, and then some of the money will come back to the equity side and some of it to Mullen. So nothing of this is for certain. And also fundamentally, how well are the IGOs going to do in Europe? How well are the models going to be? How fast can the models be developed and so on? We don't know for the time being, right? And also, I'm not 100% sure whether the fundamentals are going to be the main play here. I still feel like the main play would be the short squeeze, and also just people trading the volatilities of a penny stock that didn't used to be a penny stock. In other words, it has the basis and somewhat the fundamentals of a much larger company, which is just like the former shell of itself. So this is why I feel like going in 2023, the overall approach for Mullen shouldn't change. So we're still going to trade the stock as a short-term swing trade. We're not going to invest in Mullen for the years to come. Even though, of course, if you have made, let's say, 50% or 100% of your position, you can put this 100% in the stock as like an investment play, because that way, even if the position goes to hell, you don't necessarily feel the same thing, because this is technically a profit, right? It's still your money, but it comes from the profit. Therefore, you would have a higher tolerance for potential losses. Now, regarding how much I would recommend you to put in Mullen overall, around 1% of your portfolio, to be honest. I'm not really comfortable recommending more than that. And this is because even if, let's say, your position has dropped by 50%, you're unlikely to liquidate if it's just 1% of your portfolio. At some point, you will be, you know what, it's going to come back. It has been in my play. Let's just leave it there. Whereas if you've remortgaged your house and put 50% of your holdings in Mullen, then at some point, yeah, I think that this is not going to go well, So I would say that 1% over the course of 1 or 2 weeks might be a good approach at the current point in time.